Hey, how's it going? Welcome back to Dapper Dividends. I'm Russ. Got the hat on today. I didn't feel like doing my hair, so not going to lie, but we're going to hide it. We're going to move along. I have 25 companies that are going to be going ex-dividend in the next 15 days. Couple parameters that I set for these. They're going to be all good companies. They're over $2 billion in market cap, which makes them mid-cap and above. One thing I like about mid-cap companies is that they give you a good, stable, and growing dividend, but they also have room for their companies to keep growing, so you can get that dividend payment, you can get that capital appreciation from the company growth. Two things that are fantastic to look at. And then, of course, we have to mix in the large caps. Can't get rid of them. So 25 companies we're going to go after. They are mid-cap and above, paying a 2% and above dividend yield. Now, I want to show you this article from dividend.com that says investors looking for income from dividend stocks should concentrate on stocks that have at least a 3% yield. Yes, that would be nice, but there are some fantastic companies that are paying under 3%. So I lowered the threshold to 2%. We're going to take a look at them, starting with Ex-Dividend. On the 23rd of March is the computer hardware storage company Seagate Technology, ticker STX, currently paying 67 cents a share, which is good for a forward yield of 3.55%. Payout ratio 52%. Altria, ticker MO, is next. One of everybody in the dividend growth investing community's favorites, paying 86 cents a share. Love this company, could say a lot about them, but I think we're going to see a shift into responsibly used products, more like the heat not burn. They're going to be moving into the cannabis sector, so big things coming for Altria. Love them. Now, they do pay a 75% payout ratio according to dividend.com, but that's not to worry. They've always paid that high yield. They don't want a lot of money sitting around. They like getting it back into the hands of the shareholders, which I am fine with. 6.88% dividend yield currently in the past 12 months. And it says increasing that dividend for 12 years, but they are a dividend king. It has been increasing for over 50 years. So we'll take these with a grain of salt. I'll read them as they come. Want to get these to you, get you in, get you out, let you know what's going ex-dividend in the near future. What up next? We've got Sempra Energy, ticker SRE. Is a utility network stock paying $1.10 a share, which is a 5% hike, 5.3% dividend hike with a forward yield of 3.35%. Been increasing that dividend for 10 years with a 54% payout ratio. Now, I love this company next, Vici Properties, ticker VICI. They are the landlord to the Caesars properties. Caesars is the tenant and the operator, and Vici Properties owns the land that Caesars operates on. They are a REIT in the casino and gaming space. Will be paying 33 cents a share, which is good for a forward yield of 4.70%. They've been increasing that for 3 years. March 25th going ex-dividend is Equity Lifestyle Properties, ticker ELS, paying 36.25%, which is good for a 5.8% hike. Love seeing those hikes. They are a REIT, and they are good for a 2.23% yield currently. And they have been increasing that dividend for 1 year. Now, the REITs are going to have some wacky, wonky, crazy-looking, cattywampus-looking payout ratios. You really need to be looking at their funds from operations and not the earnings per share payout ratios, because they have to pay out 90% of their earnings in the form of a dividend to maintain that REIT status, which is taxed more favorably. We got a whole bunch of stocks on the 30th of March, starting in alphabetical order here with AvalonBay Communities, which is a REIT paying $1.59 per share, good for a 3.34% yield, and they have been increasing that dividend for 9 years. Never mind that 198% payout ratio. That's not entirely accurate, according to dividend.com. Next up is another REIT. We've got a lot of REITs on the list here. Camden Property Trust, ticker CPT, paying 83 cents a share, good for a 3.03% yield. Has been increasing that dividend for 3 years. Essex Property Trust, another REIT, ticker ESS, $2.09 per share, which is a 0.6% hike. good for a 2.92% yield, and they have been, according to Dividend.com, increasing that yield for 27 years. Finally, we got another one. I've been working at some of these locations. They're everywhere. This is a fantastic dividend-paying company. Ticker ITW, Illinois Tool Works, paying $1.14 per share. Little bit of a lower yield at 2.09% forward yield. I usually like at least 2.5%, but hey, they are super solid. They've been paying an increasing dividend for 50 years with a 57% payout ratio. Super safe and stable dividend from Illinois Tool Works. Kilroy Realty, another REIT coming at you, 50 cents a share, good for a 2.96% yield. And they have been increasing their dividend for 5 years. Mandala International is next. The packaged food consumer staple company is paying 31.5 cents a share. They have been increasing that for 8 years, paying 43.79% of a payout ratio, good for a 2.18% dividend yield. Next up is Nucor, paying 40.5 cents a share, good for a 2.35% yield with a very low 24.92% payout ratio, increasing that dividend for 48 years. According to Dividend.com, they are going to be a king. We got another steel producing company next, Steel Dynamics, ticker STLD, paying 26 cents a share, which is good for a 4% increase, 2.22% forward yield. Only another very low 20% payout ratio, and they've been increasing that dividend for 8 years. Next up is one that Big Warren B loves over there at Berkshire Hathaway. He's got 5 on it. Store Capital, ticker STOR, paying 36 cents a share. They is good for a 4.27% forward yield, and they have been increasing that dividend for 6 consecutive years. If you want to go with Warren, get yourself some store. We got a REIT where the old people go. Sun Communities, ticker SUI, 83 cents a share, which is a hike of 5.1%. Forward annualized yield 2.20%, and they have been increasing that dividend for 4 years. We got a Banky Bank next. US Bank Corp, ticker USB. Did I say Bank Corp? Bank Corp, ticker USB, paying 42 cents a share, and that is good for a 3.12% yield. That is a 44% payout ratio, which is really low and manageable, and it says they've been increasing that for 1 year. And we are still on the 30th of March here, and next up we've got Realty Inc. is next. Realty, the REIT, is a really good REIT, is good for $46.20 per share, which not $46, 0.4620, which is a 20% hike, a big old hike from Realty. 4.67% forward yield, been increasing that dividend for 1 year. And the last of March 30th, wrapping up, is WP Carey Inc., ticker WPC. Once again, they are a REIT, which is good for $1.480 a year, which is an increase of 0.2%, 6% yield, so that's really high for WP Carey. And you can see the REIT average is 4.88%, and they have been increasing their dividend for 22 years, so they're coming close to being a dividend aristocrat themselves. Way to go, WPC. I love this company. Ticker APD, Air Products and Chemicals, is next. $1.50, which is an 11.9% hike. Way to go, APD. 2.19% yield, so that's a little bit low. Only a 39-year increase, gotta hand it to them, with a 66% payout ratio. Bristol Myers Squibb, ticker BMY, is next. And by the way, these are March 31st. These are hitting those ex-dividend dates on 49 cents a share, 3.17% yield. Good for 1 year increase, 26.19%. My battery's blinking. I'm trying to beat the clock here. I don't know if I'm going to make it. My battery is dying. So that's Bristol Myers Squibb on March 31st. What else do we have? Cardinal Health. I sound like the Micro Machines guy. Ticker CAH. Cardinal Health paying you $0.4859 a share, which is a 3.39% yield. 32% payout ratio, which is low, but check that out. Cardinal Health increasing that dividend for 34 years. Popping up next, two of my favorites coming at you. They're REITs, Cube Smart, ticker CUBE. 3.53% yield. They're paying you 34 cents a share. They have increased that dividend for 1 year. I see the Cube Smarts everywhere. Next up, everybody loves this company. I love this company. They just gave a 0.2% dividend hike. It is Realty Income, ticker O, paying 23.5 cents a share. Good for a 4.41% yield. They do pay monthly. They are the monthly dividend company, and they've been increasing that dividend for 27 years. They are an aristocrat, and I love that aristocrat. To left, State Street Corp. They are a institutional trust, fiduciary custody, say that 3 times fast, paying you 52 cents a share. Good for a 2.49% yield, 30.54% payout ratio, and they have been increasing that dividend for 1 year. And last but not least, ticker, don't confuse them with the San Francisco treat, Cisco, ticker SYY, Cisco Corp, paying 45 cents a share. Good for a 2.24% yield. They have been increasing that yield for 41 years, and if that forward payout ratio of 130% is correct, I would need to look at the free cash flow ratio, because that's no bueno, but I have a feeling that the free cash flow ratio would tell a much different story. There you have it. My battery is dying. I gotta get out of here. Follow me on Twitter at RustyRam78. Check me out on Instagram at Dapper Dividends. And please, expertise comes from the community, so leave your comments in the comments section below, because you know where we like to see the comments go. We would love to talk to you, and I will talk to you in the next video.